Hey guys, Joe here from JCS-Charting. Welcome to another market update. We are hopping straight into the weekly chart of the DAX Cetera indication. And what I want to show you here is a comparison to what we have seen in 2022. A similar drop-off with that Ukraine invasion. And this year we saw another sharp sell-off with the Iran war, which started at the end of February. We have seen a decline similar to what has happened in early March 2022. We have seen the same now in March this year. And what I would like you to focus on is check on the histogram of the MACD. We had an early crossing somewhere near the top. These were all-time highs in 2022. We had the same, right, happening here with that double top at the end of February this year. And then we saw that sharp sell-off. We had the histogram increasing and volume also started to pick up, the same what happened in 2022. And now we are looking for a bounce. By the way, I was showing that chart to my members right here when we were basically at the bottom. And I said we have very good odds that we are rallying for more than 3,000 points. And this is what happened. We have seen now a rally of 2,500 points. The histogram is decreasing, and this is what we are looking for now into summer: decreasing histogram and decreasing volume on the way down on this weekly indication. Our main target is going to be a full duplication of that sideways range here shown in yellow, all the way down to 21,500 sometime in June, July. And here we are seeing another weekly chart. This is a logarithmic chart. So it basically gives us a good view on the larger scale. Once we zoom out that chart, I zoomed out all the way to that low we have seen in October in 2022. That was the start of that channel, and we have seen another touch here at the lower boundary last year in April, and we have two clean touches here at the upside that makes it a confirmed rising channel, and we have seen a confirmed third touch at the lower boundary in March with that March low. By the way, I gave out, or I even posted that on X right at that bottom. We were buying these lows into that bounce, and I said, well, there's a trigger level actually at 23,800, which DAX tagged last week, but it couldn't get the weekly close above, which means this is just in my opinion, presently just a bounce. And we are looking for a lower leg and a break of that rising channel. And since we are looking for a retracement of that rally which started in 2022, because that was the last significant low from a bear market here, which started in January 2023, we are looking for at least a 38.2 retracement of that entire rally to that all-time high, and that would be somewhere at 20,295. 50% retracement would be even at 18,685. 61.8 retracement would be at 17,075. I also want you to focus, because that is actually the major trend line which started sometime back in March 2020, and it connects these lows with September 2022. This one here lies somewhere near the 38.2 retracement in June, and that would be a nice target for another leg lower here to test that major trend sometime in summer. quick look at my H4 subcycle chart, it's still the setter indication. We have two open gaps here at the upside now from last week, 24,080, and from Friday's close, 23,803. Most likely we are, because the futures just opened somewhere around 23,450, that is somewhere here. So we are most likely going into that projection. We also have that on the hourly chart. I will show you that chart also any minute. We have a trigger here at 23,369. Either we bounce from here tomorrow afternoon. That subcycle is due by tomorrow afternoon. It may extend into Tuesday, and that would be the preferred level. If we lose that, we most likely run into 23,065 up to 23,153. That would also mean if that doesn't hold, we are most likely completing that red sequence and closing the gap at 22,921. And here's that hourly chart I just talked about. Members know about that very well because that chart worked out very nice last week. That projection was in the chart basically for the whole week. First, I gave my members that blue sequence up to 24,182. I said somewhere here should be a reversal point. I was actually shorting here 24 to 24, a few points, few hundred points to the downside. My problem was that I was shorting already somewhere 23,750 and 950 too early. That's why I was cutting these positions quite early. However, I said to my members, we are most likely in an ABC to the downside, and that B leg here, that bounce, is consisting out of an ABC. That worked out quite well. We had a target here on Friday of 24,032. The high was at 24,051, so that worked out very nice. And I said, as long as DAX is staying below 24,100, we most likely are on the short side and should get positioned there. And I kept telling, also on X, 23,650 is magnet. We were shy of that level by 20 points on Thursday, but as soon as that breaks, we most likely run into that red sequence. This is what's happening right now already. We went into that min target zone now. 23,426 is about to be hit, and I want you to focus on that level that can create a stronger reaction now to the upside. If we measure now these two legs here, we fulfill already the minimum requirements for an ABC because that second leg is the same size already as leg A. It may extend, if it's a C, all the way down to 23,131. So if 23,426 is not holding presently, we have to focus on 23,287. This is then most likely to be hit. If we lose that, there are very high chances that we are closing these two fair value gaps and also close that cash gap we just talked about at the H4 time frame. I prefer a bounce from here now at the overnight session. This one is not holding. I assume a bounce at 23,287. And we're having a quick look at the S&P 500 daily chart. I zoomed in here a little bit. I don't want to show you everything because that would be unfair for my members. And by the way, if you want to see the full chart, everything I cover at my blog you can find two packages at www.jcs-charting.com, an advanced and a basic one. I always recommend the advanced one because there I also give instructions or specific help. You can see my positioning and so on, and I do much more assets there as well. Now let's have a look at that chart. I was giving that count when we were sitting somewhere here. I also was posting that on X, and I had counted at that time a 1, 2, 3. That 3 was kind of confusing for most people, even for myself. That was more or less like a zigzag to the downside out of 5 waves. Then we had a quick wave 4 and then a long extending wave 5 as 1, 2, 3, 4, 5. Now the big question here is, what is that first leg here, that first selling leg to the downside? There are 2 options in my point of view. And by the way, we tagged that low here, basically spot on. I had a red sequence here at 6318. Actually, I'm gonna show you that right now at my Discord. Yeah, this is what it actually looks like, and this here was my analysis for March 29th. My Elliott count. And here's basically what I explained was what I just explained to you with that 5 wave move to the downside. And we had a target right here at 6318 as 5 of wave 1 or alternative wave B. And I gave my members 2 versions of that. And then this is an update from April 1st. As you can see, that level was spot on. 6318 got hit on the dot, and we had a very large reversal. So as you can see, most of my analyses are actually spot on, and they worked, or this one here worked out quite well. Even I didn't get the part in the middle actually that right as I want it to be. And by the way, the critical decision zone I pointed out here was 6722 up to 6775. That was that gap zone we were looking for, and this was that red zone here I marked as resistance zone at that update from the 31st of March. And now we are looking at that chart here again, and as you can see, we have overrun that gap zone up to 6775, as I was predicting once we were somewhere down here. So that level, or that zone, got hit. We even went higher to the 76.4 retracement, measured from that all-time high to that low. So we retraced 76.4%, which is the top usually of the so-called golden pocket. Now the big question is, what is that high here? Is that going to be the top? For this case, we most likely are in an impulse to the downside, a large impulse which should lead into summer. So we should mark this one here as wave 2, and we are now starting a crashing leg wave 3 into June, July. There's going to be a big decision zone right here. I marked here the gap at 6616 down to 6561. There was also lots of order flow, lots of volume accumulation right here, and this makes it here the decision zone. Either we see a large bounce, and if we get over that high here again, that would mean this is not going to be a wave 2. Then we most likely see another all-time high. Yes, you have heard right, another all-time high as my alternative wave C. I give it around 40% probability that we are running into somewhere near 7,100 then, into my next larger ATD sometime in May. If we are losing that large zone here and we are dropping below, we most likely revisit these lows here, probably stay a little bit higher or lower, see a bounce back to test the zone, and then the real crashing leg is about to start. And then we should see much lower levels somewhere 5 plus. And a quick look at the Nasdaq 100 hourly chart here, JFD indication futures just opened. We have here that red sequence in red at 24,952, and we have seen a very large gap to the downside. And presently, Nasdaq has completed that red sequence and is trying to get stabilized at 24,782. This whole zone here consisting out of these lows and the red 161 is going to be a support zone. This is also the upper boundary of that large fair value gap we have from that futures session of the middle of last week, from the 7th, which is a huge gap from 24,276 up to 24,746. Usually that zone or that upper part acts as support, so I assume a bounce here. Probably, I don't think we are going to close that future gap anytime near at the beginning of next week, but I think we should see a larger bounce before we drop further, and then we have a nice, left shoulder, head, right shoulder, so a so-called head and shoulder pattern set up to close that gap into the middle or end of next week. Of course, if we lose that zone here, that zone I marked here in gray, we could sell straight into that, and then we have to be very careful with an acceleration to the downside at the Nasdaq. The same applies for the S&P 500. The S&P 500 is undershooting already these lows here. So be aware that has to stop here, basically right now in the middle of the night. Otherwise, we should keep on selling into the day tomorrow. Yeah, that's about it. I hope you like that quick update. I recorded that quite late now. I'm in California right now, so I'm a little struggling with the time difference. So I hope you enjoyed watching it, and I hopefully see you next week. I keep you up posted at my Discord, so you're welcome to join there. And I also will try to hit a few posts out on X for next week. I wish you a nice remaining night and a good start into the week. Thank you and bye-bye.